What's up, trader? Pattern trading was incredibly hard for me. Trust me, until I discovered one secret in pattern trading. Now, market moves always creating a pattern. This is the language of the market. Now, a trader, if he or she wants to trade the market, he or she must know all kinds of pattern. Now, if you look at the chart, you will find millions of patterns. How many patterns you can remember and how you can trade them, it's really difficult. But do you know that there is one secret that you can apply to all kinds of pattern that made simplest possible trading strategy to trade the pattern. So in this video, I will show you that one secret that you can apply to all kinds of pattern so that you can identify any kind of patterns and trade them with high probability. Yes, just stick till the end of this video. You will see that you can trade any kind of pattern without remembering their name, without understanding how they are forming. Just apply one technique and it's applicable to all kinds of pattern. Sound interesting? Then smash the like button, hit the subscribe button if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. With that being said, let's get started. Okay guys and girls, look, patterns are really confusing. All over the chart you will find millions of patterns. Now I know that you might have already got a big list of pattern where hundreds of pattern and you're trying to memorize them, how to trade them. It will not work, okay, until you know exactly how the patterns work. So in this video, let me show you exactly how you can identify any kind of pattern and you can trade them. I just want you to pay attention till the end so that you can understand exactly what I'm going to present with examples on the chart. Now first, let's consider these three kinds of pattern that we see on the chart. Now keep in mind that there are many kinds of pattern, but the same analogy will be applied to any kind of pattern. So let's say this is an impulse in the market. Okay, the market move this, create this impulse, big impulse, and then the price created this consolidation pattern. Okay, so the market never moves in one direction. Okay, the market will move, like will create an impulse in any direction, either to the upside or downside, and then the market will consolidate, will create something like that. Okay, or any kind of pattern. So that we call a pattern. Now whatever the shape of the pattern, okay, that the pattern will follow a specific criteria. In most cases you will see that. So this is what named as a bull flag. Okay, so there is a bullish impulse followed by this kind of a consolidation and deceleration, and that is what called a bull flag. Or the market might create something like that. There is an impulse and then there is a triangular, that's called a symmetrical triangle. Okay, it could be something like that. There is an impulse like this and then there is a semicircular pattern. Okay, so any kind of pattern, it could be something like that. Okay, an impulse and then something like that, or it could be something like this. Okay, so any kinds of pattern that you can see in the market that can be traded with this strategy. So what is the strategy? Very simple. Keep in mind, once you found an impulse in the market in any direction, you will wait for the pattern to be formed, any shape of pattern. Okay, now with that pattern you need to look for something. First of all, keep in mind, when you see a bullish impulse, okay, and then the pattern is being formed, keep in mind that this pattern is likely to finally break to the upside. So normally when you see an impulse and then pattern is being developed, that means that it should move in the direction of the impulse again. Okay, it's preparing, it's gaining momentum. So let's say this is the bullish move and then pattern is being formed. So when will you enter a trade in this pattern? Most of the time you'll see that this pattern first will break to the downside, and once the pattern will break to the downside, and then this downward break will create a false breakout, and then the price will go immediately to the upside, will break finally this pattern to the upside, and that is where that is what we call a valid breakout. Okay, so once you saw a bullish pattern, okay, a bullish impulse followed by a consolidation and then false breakout to the downside, immediately went back to the pattern again and then has broken to the upside, this is where we will be entering the trade, because once it will create a false breakout to the downside, it will break to the upside. Okay, the price will come back again to test the top of this pattern, and that is where we will be entering the trade. Simple strategy, guys, no complicacy. Again repeating, any kind of pattern you see, if it is a bullish pattern, that means that when there is a bullish impulse consolidation, that we call the bullish pattern, that we are expecting it to finally move in that direction, right? Now before it is moving in that direction, it will break to the opposite side, which is a false breakout. Until it creates this false breakout, we will not enter a trade. That is the key points of this strategy. So once you saw that the price has broken down and then closed above or has gone up, that is a false breakout. Once it has done this, that is where we will be entering the trade. Simple. Now look at this pattern here, the same thing, bullish impulse created this triangle. Now at some point we will see that this pattern might, in most cases, will break to the downside, creating a level of false breakout, and then will come back up, will break to the upside, and once it will do that, we know that it has done its job to grab liquidity, and then when it will break to the upside on the retest of this or roof of this pattern, will enter a trade. Simple. I will show you quite a few examples. The same thing here, when you see this impulse, whatever the shape of the pattern, we'll look for a possible, see this is the false breakout leg, and then we'll wait for this pattern to break to the upside. So this pattern, these are the three patterns there, but in the chart you will find millions of patterns. The first goal is to identify the pattern and then wait for the false breakout. So if it is a bearish price action, let's say if the impulse is to the downside, like this one, impulse is to the downside, and then let's say like this, creating a bear flag, okay, then what we will be doing, we will be waiting for a false breakout to the upside and then come back down, finally break to the downside, and then we'll for a retest, and then we'll enter a trade. Simple strategy. Now let's jump on the chart to see all the examples so that you understand this pattern, and next time you can apply in your trading straight away. Okay guys, so let's look at this example. Guys, keep in mind that pattern works in everywhere. So once you understand it, it will really make your trading much easier. Now look at this GJ. So what you see, that you see this is a big impulsive move to the upside, a big impulse, and then what happened, it has created this pattern. Look at this one here. Let me replay this chart so that you understand it clearly. You see that it is basically creating a nice looking pattern. Okay, it is a narrow pattern, but what you see finally, that the price has broken out of this channel pattern to the downside, and then so once you found this pattern, you see that sometimes it will be a big pattern, sometimes a small pattern, but there is an impulse, and then this is the pattern it has formed. Okay, so with this big red candle, the price basically came out of this pattern to the opposite direction, and then what happened, the price immediately gone above, has broken out of this pattern. Okay, so once you identify the pattern, you have seen the price has broken out of this pattern, what you will do is you will be waiting to test of the top of this pattern. From this zone we will be entering a long trade, and you can see that exactly from the top on the retest of this pattern with this previous resistance tested as a support. This is the pin bar, that is entry candle, guys. Look at this, how the powerful the strategy. So once you saw the pattern, wait for it to the break to the opposite direction. Once it has broken to the opposite direction of the trend, so this is the impulse pattern breakdown, okay, opposite direction. Now wait for this to break to the upside. It has broken to the upside. Now identify the roof of the pattern and wait for the price to come back and retest of this top, the resistance as a support. Once it did it, rejected with this pin bar, then go long. Okay, so once you found that, you have to go long from here with the stop loss below this candle, and you can target at least 1 to 3 or more risk to reward ratio, and that's a nice looking winning trade, right? It's an easy, simple strategy that no one will tell you. Give a big thumbs up. Now let's jump on to more examples in different market condition, different time frames, so that you understand it clearly. Okay, so let's apply the same analogy here. You can see that there is a big impulse, okay, with this impulse, a big clean impulse followed by this consolidation. You see, this is a consolidation. So this consolidation is a pattern. Whatever the shape of the pattern, we see that there is a pattern here. Okay, once you identify the pattern, the next step is to wait for the pattern to the opposite direction. That means that the impulse is to the upside, and we are expecting this price to finally break to the upside, right? But before it's breaking to the upside, we can expect an opposite breakout to the other direction. So wait for that. You see that the price came down, has broken this pattern completely to the opposite direction. So this is the pattern here, okay, a triangle has broken opposite direction. The next step is let it break until it has broken to the upside. So once you found that it has broken opposite direction, you need to wait for until it breaks to the upside. Okay, you can't guess that okay, it has broken, now let's buy. No, until it breaks to the upside, the top of the pattern will not be entering the trade. So once you see now the price is moving up, still the price didn't break the high of the pattern, so we'll identify the top of the pattern resistance, and now the price has broken out of that pattern completely. You can see that with this big bullish candle, the price is completely out of this pattern, has broken the roof. Now the next step is, now we are clean that okay, the price has broken out of the pattern, created the false breakout that we are expecting, is ready to shoot up. Place your pending order here, stop loss below this low, if it is a bigger or even below this bullish candle, and at least 1 to 3 risk to reward ratio. That should be, yeah, the price came, you can see that exactly from here it tested this resistance and triggered the entry, and then started to shoot in the direction. Okay, so it's simple, easy understanding, guys and girls. No one will tell you this secret. So make sure you give a big thumbs up and also subscribe to the channel if you haven't done yet. So let's jump on to some more examples where you can find different kinds of pattern. Okay guys, so let's see this example on a bear market. As you can see that the price has created this impulsive move down. It's a strong impulse down, you can see that, and followed by this consolidation. This is a nice looking pattern. You can see that the first thing, as I told you, is you need to identify the impulse and the pattern. What is the shape of the pattern doesn't matter, just identify the pattern, and probably you can draw some support and resistance on that pattern so that you know that where is the top and bottom of this pattern. So you found the pattern. Now what is the next step is, because it's a bearish impulse, you can see that it's an impulse, bearish impulse. Now we can expect the price to go up, create a false breakout to the upside, and then break down where we will be entering the trade. Now let's do that. You can see that the price has gone up with this big green candle and then came back down immediately. So we found what we are looking for. We are expecting, this is as I told you, this is a bearish move followed by this pattern. So what we will be looking for, an opposite direction of the breakout and then come back down again. So we have seen that the next step is now break to the direction of the trend. So let's see. Okay, that's what we have got. We see that it has broken, still not fully break. So we have seen now with this red candle, the price exactly has broken out of this pattern, and now we will consider shorting from the bottom of this pattern, keeping the stop loss somewhere here above the pattern. And now we can target 1 to 2 or 3 risk to reward based on whatever risk reward you are using. Okay, so we can expect now that we are on a trade, and we have seen that immediately the price came back down, hit your profit target. Smash the like button now. Okay guys, so let's see this example on British pound US dollar on the 1 hour chart. So you can apply this strategy in any time frame, in any market condition. Now just the main thing you need to do is to identify the impulse, identify the pattern, wait for the false breakout, and then to break in the direction of the impulse. So what you see that British pound US dollar, you can see on the hourly chart there is an impulse happen, a strong impulse on the downside from this zone, and then see the pattern how this forms. So this is the pattern that British pound US dollar has formed. You can see that the price was consolidating in this zone, okay, creating this pattern. Now at some point what you have seen, this is the top of the pattern. If you just draw it properly, then it will be something like that. And what you can see that the price just has broken out of this pattern to the upside, created a long wick candle, false breakout, and then the next one has broken down immediately from this pattern, completely disconnected with this doji. And look at this, what happened next. The price immediately has gone to the other direction. So this is another impulse. So every impulse, the price will do the same thing. So once you know that, you know when to enter exactly, when to exit the trade. So the next one, the same thing, we have seen another impulse and then another pattern. Okay, so this one is another pattern. You can see that now if you identify this pattern, there is another trade here as well. So this is the pattern that it has formed. Now with that pattern, the price did the same. You can see this is the top roof of the pattern, the resistance. The price has created a long wick candle, has crossed all this candle here, and then with this red candle immediately the price has came back and broken to the other direction, and then created the same thing repeating. Look at guys, once you know that, you know exactly what are the trades, when to enter. There has been another impulse, the same thing, the price has formed this different kind of pattern. Now you can see this is the pattern that has formed, and then with that pattern the price did the same. So the price has broken to the upside, created this couple of candles, false breakout, and then has broken out of this pattern again. So these things repeating over and over again, and that's how the market moves. Once you understand this pattern, you pay attention, your brain started to pick that pattern, and then you wait for the false breakout to one direction, that means in the direction of the impulse. And then once the false breakout is done, you can expect the price to break to the same direction of the trend, and then you can enter the market. I sincerely believe that this valuable strategy was helpful to you. If you find value in it, then don't forget to subscribe to the channel, and also don't forget to watch these 2 videos. Will change your trading completely. Thank you for watching. See you soon in my next video.